Hey, 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 everybody. Happy Election Day 2024. I'm Sean McLaughlin. That's Steve Straza. Steve, how you doing, buddy?
Doing great.
Doing
Doing
great. Good to
so.
hear. I unlike you, I suspect you are probably watching the news a little bit because you like to watch the news.
Yeah.
I can make you a promise, Straza. I will not watch any news today, nor
Really?
will I watch it tomorrow. I'll
Wait,
hear everything I need to know from you guys when I watch the morning show tomorrow morning.
so you're gonna try and tell me that this is election day 2024. You're not gonna have the news on tonight as they're counting votes?
Nope,
You don't want
not
to
at
know
all.
who the next president of the United States is?
Uh, like I said, I'll find out. Well, I don't think anyone's going to find out tomorrow, to be honest with you. I'll find out when it's known. The news will arrive in my lap. I'm not worried about it. I don't need to watch the news. I'll know.
Yeah, it's incredibly zen of you. So we were just talking about a little conversation that we had on the morning show this morning. JC and I, we canceled Twitter Spaces today. I mean, Sean, I'm excited for today just because I want to get to tomorrow. We've been talking about the election trade, the Trump trade, the DJT for it feels like forever at this point. It really does. So, what does the market like? It likes to get through these events. Definitely have some certainty around them. Like what you said, if that ends up being the scenario tomorrow morning where we don't know, probably the worst case scenario. I don't think that that would be a blind risk to the market, though, right? So whenever you have an event like this, you have to think of where the market is. It's always the expectation versus the reality. So a lot of people are talking about this spooky scenario where the election's too close and nobody really concedes and we don't have a clear winner. And then this goes on maybe for days, maybe some are saying it could be weeks, right? The market, I think, does a pretty good job at pricing in the things that it knows about. People have been talking about a contested election, right, or too close of a race to call kind of thing since last year, the year before. So if the market hasn't priced that possibility in by now, I'd be pretty surprised. I think the opposite is what I'm kind of looking for more than anything. If we do get a decisive, victor tonight or tomorrow morning, and we know who our president is, I think regardless of who it is, the market could see a nice upside reaction.
Yeah, I my feeling is that if we're going to have a big move coming out of this election, I think the big move is likely to happen to the upside. I don't think the big
I
move, I
agree.
don't think anyone's going to be shocked by anything that's going to scare people and tank the market. I mean, we could be wrong. We've been wrong before, but I
I
feel
agree
like
with
the
you.
risk is to the upside. Um,
And I
yeah.
think the reason why that really is as trend people, which we are, chart people, it's that reactions to political events, just like reactions to earnings events or economic data releases, reactions to these things tend to occur in the direction of the underlying trend. And if you zoom out on a chart of the S&P 500 or really anything, use that information. I think that's the probably one best piece of wisdom I can give anybody on a day like today. Sure, is it going to be volatile? Could it be crazy? Absolutely. If I were a betting man, I would bet that the reaction eventually occurs and, takes direction in the same place as the underlying trend, which for stocks and most risk assets is up and to the right.
Yes, I'm with you 100%. And you know what? You know one thing that's been lost about the in the conversation about this week, and it was lost to me. I had no idea. I was reminded last night. I had a trader meetup, hung out with my trader people here in Colorado, and someone reminded me we have an FOMC meeting on Thursday. Totally forgot about that. It's completely lost in the conversation.
Yep.
So I'm not optimistic that we're going to have a clear winner tomorrow morning when we wake up,
Mhm.
but regardless of that, I feel like we need to get through the FOMC thing on Thursday before I feel like, okay, now we can settle down. Now we could focus on fundamentals and technicals and all that stuff. Like, I just feel like I feel like that's ripe for shenanigans on Thursday, right? Like, if I don't know, it doesn't smell right to me, buddy. I think it's Thursday we need to be worried about.
I think if it comes Thursday and the FOMC is the most talked about, most important market event of the day, that's a great thing.
Absolutely. I agree
You know
with
what I mean?
that.
If we're all focusing on the FOMC come the end of this week, fantastic.
Yeah. But I feel like no one is focusing on that, and
Yeah.
maybe there's a surprise in store from that, and that catches the market off guard, and that introduces some fireworks that people did not see coming. So for me, Straza, I know you said you're waiting for tomorrow. I'm waiting for Friday. I want Friday to get here. Then I'm going to start feeling better about the markets.
Yeah, I like that take, Sean. Everybody wants like the election trade, right? What should I buy? How should I position for the election? How about positioning for lower interest rates and a Fed that is finally cutting? Things like biotechs. I think even the banks benefit from lower interest rates. I think ARK, the ARK Innovation Fund, ARKK. Look, this base hasn't even resolved yet. Like this base is still printing.
I'm
We could
long. I'm
press
long
trend
arc.
reversals. How about biotechs? Speaking of a group that does better with lower interest rates, how about the home builders? Right? Maybe that's the trade, not the election trade. Maybe it's Thursday that we should be paying attention to, not
I
tonight.
think, yeah, I think Thursday is the big day. I think Thursday will give us the final piece of clarity we need for the next move. That's what I think is going to happen.
I like that, Sean.
Yeah.
And right, nobody's talking about it for like the first time ever.
Right.
How
All
it
right.
works.
So listen, this is the Flow Show, and normally you and I put our heads together and come up with some trade ideas. You and I already agreed before we started the show today we were not going to do any trade ideas. It just feels weird putting a trade on ahead of a binary event like this, and we've already been putting trades on over the last couple of weeks, positioning for this kind of thing. So we've made our bed. We're going to lie in it and see what happens. That said, Straz, I don't know if you read my note last night because I've had people asking me in the All Star Options chat room. Some people, not me, but some people are worried that they're overexposed one direction or another. Like they have positions on and they like their positions. They don't want to take them off, but they're concerned, right? I've got some people emailing me that they feel like they're overly short right now. They're betting on a market sell-off for whatever reason. I have other people saying the other thing. They're overly long, but they don't want to exit any of their positions. They don't want to trim anything. So they were asking me, what can I do in a situation like that? And so I wrote a piece last night. And I said, listen, this is something that I do from time to time when I need a quick and dirty hedge, right? Like I need something that's easy to put on, easy to manage, will help me out if the unexpected happens. All right. So let's talk about the people who maybe are, overly short right now, right? Because you and I talked earlier, we think that the risk, if there's a big move in the market, the risk is probably to the upside, right? So if you're overly short right now heading into this event and that's making you nervous, well, for me, a quick and dirty hedge I like to do is I like to do debit puts or debit spreads in options in the QQQ. So the QQQ, that's the NASDAQ ETF, right? I like the QQQ because it has a little bit more beta, right? If we get big moves, it's likely to have an outsized move in one way or the other.
Yep.
And if you're overly short right now or leaning short and that's making you uncomfortable, a good trade, at least for me, a good quick and dirty hedge is to buy a call debit spread. Excuse me. So what I would do is I would buy a at the money call, and I would sell a call that has a 25 delta, whatever strike that is. Right now, if you're looking at options that expire at the end of this week, which is what, if you're worried about the election or if you're worried about this week, then you should probably buy options that expire on Friday, is what I'm thinking. I would buy, I think those spreads are about $10 wide right now, maybe 12 last time I looked. But you buy one of these debit spreads, these debit call spreads, and your risk is limited, right? They don't cost a whole lot. For like a $12 wide spread, it might cost you $3-ish ballpark, right? But if you get it right, if the market goes higher, that spread could potentially be worth $12. So you 4x your money on those spreads. And that may not compensate you for all the risk that you're exposed to. But if you're an options trader like me, you probably have the majority of your positions probably have defined risk, right? You don't have open-ended risk. So you don't need to like protect yourself for the S&P 500 or the NASDAQ to gain 20% overnight. You don't need to protect against that hedge, but you do need to protect against maybe a 5% move or a 4% move. And a debit spread, a debit call spread in the QQQs will help mitigate a lot of that risk. And you got to figure out the sizing that works best for your portfolio. Maybe think about how much you think you potentially could lose if you're on the wrong side of the big move, and buy a put spread that would, potentially pay most of or all of that potential loss. And again, it's a defined risk bet. Whatever you pay for that, it's insurance, right? I mean, when we, whether we insure our houses or our cars, whatever, when we write that check every month, it's money we don't expect to ever see again, right?
Yeah.
Hopefully you're not paying through the nose for it. But it's a good way, it's a good quick way to add some portfolio diversification if nothing else works. Like if you don't want to take any positions off, or if you don't want to trim, if you're sitting in some positions, they have some nice gains and they've earned the right to have a little wiggle room. A quick and dirty hedge with the index options, I think, using the debit spreads, I think is a good move.
And the debit call spread that you described, to be clear, that's hedging against upside risk.
Right.
You win on a breakout higher with that.
Exactly. And you could do the same thing in the other direction. If you're overly long, yeah, if you're overly long and you're worried about the downside, you could buy a at the money put spread. So you buy the at the money put, or maybe a slightly out of the money put, and sell the 25 delta put against it, creating that vertical spread. And by the way, a big reason why I should have mentioned this at the top. The big reason why I'm doing the spread versus just buying a call or just buying a put is because right now options premiums are elevated, right? People are scared, people are hedging, people are worried. So you can mitigate the cost of that insurance quite a bit by selling those out of the money options, because once this event risk gets out of the way, those out of the money options are the ones that are going to decay the fastest, and that's going to actually help your position.
So should we view an election or any kind of political event like this where people are expecting volatility, do you just view it like you would an earnings report? So all things equal, you'd expect the premium to come out of these options contracts in a big way tomorrow and probably through the end of the week?
I think so. I think if I were putting these hedges on today, I would be doing them in options that expire on Friday, right?
Oh.
And as we discussed a few minutes ago, I actually expect the premium to really come out on Friday, because I think Thursday, people are forgetting about the FOMC. That's something that introduces risk to the market. So I think Friday is when you'll see a lot of the risk premium come out of the market. And yeah, so I think the spreads are the move. You don't want to buy straight puts. You don't want to buy straight calls. Sure, they could work. Absolutely, they could work. But you're going to pay a lot for them, and it's going to kind of decrease the benefit you get if you get them right? And it'll obviously increase the loss if you're wrong. So
it's not to say that you don't want long exposure. Like, we come on here every week, Sean, and we're putting on, like, I feel like another long calls trade or setup. So, like, you're very exposed long. You just don't want to go putting on election trades today. Should have been buying the banks or getting long the biotechs last week, the week before. Not right now.
Yeah, right now you've run out of time, right? If you're putting on new trades, you're grasping at straws. But you can put on those hedges that I'm talking about, those quick and dirty debit spreads in the QQQ. At least that's my vehicle. You might have a better vehicle for you. Maybe you prefer S&P options. That's fine. I just like the Qs because they give you a little bit more juice when you need it. But those are easy trades you could implement in the last 5 minutes right before the closing bell if you want, to dial in your risk or reduce your risk if you need. And if you have questions on that, guys, hit me on Twitter. I'm at Options Sean. I'm happy to just walk it through with you more if you need it, or shoot us an email, info@allstarcharts.com. We can help that way too.
And I like what we did here today, Sean, because the reason we came on and said, let's not put on a trade, is because we try to talk about the things that we're doing, trades that we're actually putting on this show. And the truth of the matter is that neither of us are really planning to do anything today.
Nope.
To be honest, I'm going to send one update for a letter today. We're going to roll calls, but the way I think about that is if I'm rolling them and entering new calls at an elevated premium, well, I'm closing out these probably at an elevated premium too. So that's probably a wash. But outside of that, I wouldn't want to be doing anything in the options market. And I don't want to be doing anything really with common stock either. You have your positions. You're all set. You don't want to trade around an event like this. You want to lean in the direction of the primary trend, which we are, mostly long positions in our portfolios. And let's see how it goes. That's really all you can do times like these.
This was a great flow show today, Shiraz. I'm glad we did this. I think we shared some good information. And guys, just further information about the hedging. I wrote about it in the newsletter last night. If you guys, I put the link in the YouTube chat there. If you guys want to sign up for my options newsletter, I put out little snippets just about every day. You can click that link and sign up. It's free. It's, good education, right? We discuss all kinds of things there, and that's what we're trying to do, trying to help you all out. So thanks for tuning in to the Flow Show. Hey, enjoy not watching the election tonight if you're like me. Have a good night. I might My son's got basketball practice tonight. We're gonna be playing basketball. You know, we're gonna be doing stuff, not paying any attention to this. And I hope more of you do that.
I'm going to an election day party. Gonna
Oh,
put on CNN and just have a grand old time.
that sounds like the worst thing ever. But I hope you have fun doing you.
I wish I was kidding.
All right, everybody. We'll see you next week.
Peace.